Hey everyone, welcome back to Corporate Decoder. Today, L.O.K.V Acquisition Corp V just filed an 8K/A for a forward purchase agreement, and I am seeing one detail that could really matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing details a deal that could help manage shareholder redemptions in their upcoming merger, which is pretty smart. But there is a subtle element that might be a big signal for the deal's future. Alright, let's dive into Live Oak Acquisition Corp, V, ticker symbol LOKVU. They are a shell company looking to merge with a company called Teamshares Incorporated. This filing today is an amendment to a previous report, and it is all about a forward purchase agreement they've made with a fund called JBA Asset Management LLC. Think of this like a pre-arranged deal to buy shares. The key date here is the 1st of June 2026, which is when this forward purchase agreement was put in place. This is all happening in the lead up to their big business combination with Teamshares, which was announced back in November of last year and is expected to close soon. Now, what exactly is this forward purchase agreement? It's a bit technical, but at its core, it's a way for Live Oak to get a commitment from this investor, JBA Asset Management, to buy a certain number of Live Oak shares at a set price. This is important because Live Oak Acquisition Corp. V is a special purpose acquisition company, or SPAC. SPACs raise money through an initial public offering, and that money is typically held in a trust account. When a SPAC merges with another company, like Live Oak plans to do with Teamshares, shareholders have the option to redeem their shares, meaning they can get their initial investment back from that trust account. This can significantly reduce the amount of cash available for the combined company. This forward purchase agreement is designed to help offset those redemptions. Essentially, the investor, JBA Asset Management, agrees to buy shares from Live Oak, which adds cash to the deal and reduces the number of shares that will be redeemed by the public shareholders. The agreement talks about subject shares. These are the shares the investor is agreeing to buy. The maximum number of these shares is set at 4 million. They will be purchased at an initial price determined a few days before the merger closes. This is a crucial detail that investors need to watch. Live Oak will pay the investor what's called a prepayment amount from the trust account. This amount is calculated by multiplying the number of subject shares by this initial price. The main goal of this transaction is to make sure there is enough money for the Teamshares merger to go through smoothly, even if a lot of Live Oak shareholders decide to redeem their shares. Now here is where it gets interesting and potentially a bit risky. The agreement states that the price the investor will actually pay, called the reset price, can be adjusted downwards during the term of the agreement. This means that if the value of Live Oak stock drops significantly, the price the investor pays could also go down. This is designed to protect the investor somewhat, but it can also signal concerns about the future valuation of the combined company. The FPA investor, that is JBA Asset Management, is agreeing to waive their redemption rights for these subject shares. This is a big commitment. They are essentially saying they are locked in as investors for a certain amount of shares, regardless of what other shareholders do. The filing also gives us a clue about the value of the shares in the trust account. It states that the approximate redemption price per S-share if the trust account were to be liquidated on May 29, 2026 would be about $10.54. This gives us a baseline for the value of the trust account and the potential return for shareholders who might redeem. This agreement is filed as Exhibit 10.1. It is worth noting that the exhibit lists HB Strategies LLC as the counterparty, not JBA Asset Management LLC as mentioned in the body of the filing. This could be a clerical error or indicate a slightly more complex structure with a special purpose vehicle. It is something to keep an eye on. Live Oak is an emerging growth company. This means they have certain regulatory flexibility, like being able to delay adopting new accounting standards. It is a common status for companies going public through a SPAC. Looking at the broader picture, Live Oak stock has been trading around the $13 mark recently. This is slightly above the initial IPO price of $10, but well below the $19 plus highs it saw last year. The merger with Teamshares is expected to be accretive, meaning it should increase earnings per S-share for Live Oak shareholders. This filing is an amendment of a prior 8, indicating they are providing updated or additional information related to the original event. News from the 2nd of June confirmed this filing and highlighted the forward purchase agreement. This is a pretty standard move for SPACs when they are trying to de-risk their merger and ensure it doesn't fall apart due to excessive redemptions. Reports from May indicate a total consideration of $525 million for the Teamshares merger, with a PIPE deal which is a private investment in public equity. These PIPE deals are often crucial for SPACs to raise additional capital and provide confidence to public investors. Looking at institutional holders, Calamos Advisors is a notable shareholder with about 600,000 shares. JP Chase and UBS also hold smaller positions. It is interesting to see the significant stake of Calamos Advisors. Now, what does this all mean? The forward purchase agreement is a positive sign that LOKV is actively working to secure its merger with Teamshares. By lining up this investor, they are trying to minimize the risk of the deal collapsing due to redemptions. However, the aspect of the adjustable reset price is something to pay close attention to. If this price is significantly lower than the initial price, it could suggest that the investor anticipates a decline in the stock's value post. Merger, or that Teamshares may not be as strong as initially projected. It's a way to hedge their bets, but it's also a potential warning sign for other investors. The fact that this is an amendment to a prior filing suggests they are refining the terms or providing more clarity on the deal, which is part of the ongoing dance to get this merger finalized. The primary risk I see is if the negotiated reset price ends up being drastically lower than the initial price. It could indicate trouble ahead for the combined company's valuation. That is my take. Stay decoded. If you want the broker and charting tools I use day to day, they are linked below. Grab a free sign up if you want to support the work. Like this video, comment with your thoughts, subscribe for more, and join our Discord in the description.